Hello folks, this is L.A. Little and this is your weekly TA wrap. Well, we take a look at these markets from a slightly different perspective, the neoclassical one, and ask ourselves what happened last week and what might we learn from it for the coming one. I do the show once a week every Sunday night live at 9 o'clock Eastern Time here from the base of what is a beautiful autumn in the Rocky Mountains. Folks, I'm glad you could be here. For those of you that watch this on YouTube or on live stream itself, I welcome those viewers. Even if you aren't on live, you can reach me. You can actually send me email. You can send me email, text, or if you're live, of course, you can type into the chat room, ask questions. I try to get to those, answer those questions for you. Last week, we saw this market do more of the up thing. It doesn't really want to stop. It continues to show nothing but up, so to speak. So we've had a huge run off the bottom again, another one of those V-shaped moves straight up. Last week we actually had the potential for a turn. It was on this day, on Wednesday. It wasn't showing here on the S&Ps, but was elsewhere. Two-bar reversals. They flat out ignored them on Thursday, worked higher, leading to another push on Friday. Friday we pushed over the highs on the SPX. Lighter volume over the highs though. If you look at it on the weekly, and since we're doing the weekly show, let's see how this works tonight. So we'll try to watch both of them at once. Volume expanding, spreading higher, right? That's two bars. Usually you get a breakout, you get another couple bars up. This in fact was a little bit different in that you had the pullback and now the straight up move. But as you can see in 3 weeks, folks, we've gone from 1646 up to 1746, or actually 1759 at the high. So we've up 113 points, 3 short weeks. So roughly 35, 40 points a week, more than that, right? 45 or so. 45 on a 17 base. That's 2.5% a week for 3 weeks straight. That's pretty big move. We've seen these kind of moves before. You can see them all the way back here. You get a big move, you get some sort of a retrace, right? Each case. And then they started getting more labored as they got up into this area. So you had 6 months of straight up almost. Then some more labored, larger moves down. This was that June move. And then in August, we got one as well. Not much of one in September, but it was a spike down and now back up. Each time we've carried over the highs, we've carried a little bit farther and then gave it back up. We'll see how much farther this one wants to stretch. But as it is right now, there's nothing here whatsoever telling us it's going to turn and come back the other way. The weakest sector, or our weakest index, actually has been the Dow Jones Industrials, although this particular sector has actually started to pick up some juice as it moves higher. As we came into that big bar, had some hesitation. That was that day of potential reversal elsewhere on other indexes, but you know, it got into it deep. That says it wants to go to the top. 15,466 is that top, and we're trading at 15,512. Excuse me, not 15,446 is the other. 15,466. We're trading at 15,570. What am I missing here? There, finally we got it on the right one. 15,654. So it's about 100 points, I believe. Yeah, almost 80 points. That's where it wants to go. I would be very surprised if it doesn't go there now, because you've got the push going and you're not getting any kind of pullback anywhere else. This thing, ABCD structure, there isn't even one. You know, it's not until here that you get one. So I mean, if you take ABCD structures on these now, and that's another interesting point we haven't talked about. We talked about it, the possibility of that setting up. This really is an ABC structure now on the way up, which would take this much higher if in fact that plays out. But I don't know that that's what we're going to see. If we go to the NASDAQ, and and look at it. You know, nice big stretch higher here on the weekly. Volume's expanding. It went over the high on Friday, closed underneath it, but had volume expanding. So that says it can go right back up there and test it again, and I'd be surprised if it doesn't. Apple reports tomorrow. That's going to be a big catalyst, probably one of the last big catalysts on the earnings front. You had a gap up. You came down to try to test the gap. That was that reversal setup. The bar here, you go over it, back underneath it. That says you get a reversal, right? You got it on this index in the NDX, but you didn't get it elsewhere. Now you go over the top. You have less volume, more volume. You close underneath it. So you failed, quote unquote, on price, but you didn't fail on volume. So that says you can go right back and test some more. Given that Apple reports after the bell tomorrow, I would be very surprised to see this come in and fell, but instead try to reach the highs again tomorrow. It's been a beautiful ride if you've been on it all the way. Of course, we've rode it most of the way. We've had some areas that we've gotten cautious. Sometimes it's bit us, and sometimes it played out to perfection, and that's the way it works on the upside. But you always have to lean with the trend until the trend tells you not to. The NDX looks almost identical. Same sort of thing, stretching higher volume the past week, higher volume on Friday, over, back under, same sort of scenario. Now the only one giving us a different signal is the Russell again. The Russell actually failed at the highs. 1121.53, it got to 1121.92, closed underneath it, less volume. That's a failure. And that's the only index giving us a failure. And though we don't have the volumes back here on these prints, you can see volume expanding again as you got to the high. So on the weekly, it doesn't show as a failure. 11:15:04, 11:18 is the close. So you close over higher volume. It is a doji on the weekly, but right now the only signal that says we won't go higher is the Russell, and everything else says that we can go higher. As a matter of fact, S&Ps and Dow look like they want to go higher, while the NASDAQ and the NDX says that they can test higher again, and the Russell says, okay, we're getting extended and we want to try to pull back. So a little bit of a mixed signal again, and honestly over the last 3 weeks we've had a lot of mixed signals. If you're looking on this time frame, on the intermediate term time frame, it's all up. There's just nothing there to show us anything different than up. If we go look at the major sectors, that picture looks pretty much the same on both time frames. On the weekly, up, 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 right? You're over the highs, you break out, you're extending. On the daily, same sort of thing, except for here, you're getting a 2-bar reversal. You go over, back under, you close under. That's on the IYT. That says short term, this thing wants to try to pull back. The semiconductors. Remember the semis? We had multiple semis come out, trade down on earnings. It didn't matter. This thing just kept climbing. And then finally, it got hit. And although it did get hit, you know, it didn't do all that much damage, just took back a week and a half's work. But now you've had 2 inside days. You had a little bit more volume on Friday, but you're actually seeing this thing unable to lift. That, like the Russell, is a small warning sign. If we look at it on the weekly, you go over the top. This 41.27 was the high with about 6.3. You do 6.3 again. You get over the high. You close underneath it. So you're almost the same volume, but you're actually slightly over. That says this thing can test again, but it's close enough to where it doesn't have to. I mean, when we're talking, you know, 200, in this case, it's a 6.352 versus 6.134 versus 6.351. So you can see we're only talking about, you know, 200,000 shares on 6 million. It's not a lot of shares, but you know, it's close enough to where this thing can actually pull back without another test right away. It's already done a retest regen, and that was successful. So If it comes back the next time, it's not that. It's just coming into support. This does look like on the daily it wants to try to trade lower though. Then we get into the other stuff that shows no sign of coming back. XLB, for example. So over the highs. Yeah, over the highs on the weekly, over the highs on the daily, hanging at the highs. That one looks like it can trade even higher. If we look at the XLE, this one had a pullback. Volume expands on the pullback. Now it bounces a little bit. That one looks to come back at us, and on the weekly it's a failure. So XLE starting to show signs of wear and tear. The XLF also came down, gap down, is trying to push back into the gap. The volume's not much. This was testing that high on the weekly, 2093. It tested it last week. 2091 was the close. It tested it again this week. 2086 is the close. Less volume again finally because you had more volume. So now you actually have a test of the prior week and of the prior swing point high, of which it hasn't been able to close over yet. Volume over there 1.6, volume here 1.5. That's actually a clean failure on the weekly on the XLF. So XLF, XLE, those still look like they want to try to pull back a little bit, and the XLF in a more major way on the weekly. Then you go to the industrials, powering higher. Looks like the XLB. There's nothing wrong with that one. The XLK also powering higher, and that was based off of all the pushes in the technology sector on Friday after earnings. Amazon, what was the other one? Microsoft. This high was 33.57. 33.50 was the close, less volume. That's a failure on price and volume testing the high. That one could try to pull back. On the weekly though, it looks fine. So you're seeing some short-term extension, which you would think after this much push. Some short-term extension, looks like it wants to try to come back. On the weeklies though, these things look primo. So what does that mean to me? That means if you get a pullback, it's probably going to be a buy. The two weakest sectors have been testing to the top side, right? XLP almost to the highs again, testing, and you can see it here, and it's hanging up there, and that is interest rate sensitive, and that's what's pushing it. And then the XLU is the same thing. Interest rate sensitive, gets over to swing point high and actually finally changes trend, wants to try to get to the next one. And the last two sectors, XLV has been hanging at the highs. Can't get any higher though. It's just hanging there. That's correcting in terms of time instead of price. It's at the highs here on the weekly. Doesn't look bad. Yeah, it can pull back, do a retest, regen. And actually, it wouldn't even be a retest because it's already done it. It would just be back into support at this time on the short-term time frame. And the XLY, which has been even stronger, and that one just powers ahead. So if you look at the strongest ones right now, you got the XLY, the consumer discretionary, you have the industrials XLI, and you have the XLB, probably in that order. On the weaker side, energy, financials, and the semiconductors. And then you have some that just simply want to correct because they're so extended, which is like technology, which is the what was the other one? The technology, the transports, and then you have the two that have been bringing up the rear that are getting a big kick because we're seeing the OX markets, and I'm going to pop over now to the TLT. You're seeing the OX market show you strength, right, in the TLT, which what? Brings interest rates down, which is pushing the XLP and the XLU up, right? Because as these come down, you can get less interest parking your money in a bond, and you can get more going in and getting the dividends on these high dividend stocks that are in the XLP and the XLU. And I see a comment here about the split screen. Good. I'm glad. I was thinking seriously that this would be a better way of showing. And you always worry about too much real estate, but that's great to hear. I'm glad to hear that. So because this is the first time we tried it, and that's good to hear. TLT, while we're here, over the swing point high, here, you got a failure on the weekly as you came into this big bar. So the bottom of the June 27th bar, 108.37. You go into it, you close underneath it. 108.29, you get to 108.73. You're doing 37 there back into more than double that, right? Or almost, well, that is more than double, 75, almost 76. So what you're finding is as you come up, right, even though this hasn't finished the ABCD structure it had in place, as it comes up, a lot of distribution taking place on those who are losers over the last 3 months. They're wanting to sell those shares, get out of them. And that's what they're doing. I expect you're going to see this thing pull back, interest rates to go back the other way, do a retest, regen probably off of this swing point high, and potentially come all the way back into the support area and then try to turn again. This eventually is going to go lower. Interest rates are going to go even higher. You know, this move down though, too fast, too far, consolidate, bounce, maybe even get all the way up to here, the bottom of that, to do a retest off of it, right? And then maybe give it all up. And that's going to take 3, 4, 5, 6, 7 months to play out. It's going to take a while. And then at some point, continuation. And I'll pull over the monthly chart just to show that you have kind of two zones. You have this big zone at the top, and you have another one from about here down, right? This got into the bottom, into this big bar. It's not enough to break it down yet. You're going to have to build up some time in monthlies now, going sideways, and then eventually try to attack it and get down into the bottoms of this lower zone. It's going to take a while, right? That's on your monthly. All right, so let's go over to the fun stuff everybody likes, which is gold and silver. So gold had a nice move last week. Gold spikes up, tries to get into the top of the September 20th bar on the daily, right? 127.90 is that high. It gets up to 130.53, closes at got to 130.92, closes at 130.46. So you're over that high, right? The volume's not there, but you're over it. 130.91, let me look at that one more time. 130.46. You got over it, you got over it. Yeah, I was wondering why my numbers were different. You got over it barely, right? And then you pull back underneath it and the volume is not there. That says this thing's going to try to pull back. You may get one more test, but this thing's going to try to pull back, consolidate, and then go after that resistance zone one more time. And then that will be the tell, right? That will be where it either pops over it, and if you look at it on a weekly, you pop over it, you get back up to those swing point highs that you see here on the daily, you get back up to them here, right? And you actually try to get back over this big zone that is created. This is a huge resistance zone because you can see the volume as this dropped out of the, a gap down, huge drop, gap down. Anybody up here and anybody back from here over, and matter of fact, if you pull the monthly over, that gap down when it came here, that took away everybody from August 2011, when it broke. Anybody in there from a year past is loser. As you come back up into that, that's a huge zone you got to try to cross, and it's gonna take a lot of testing to get back over that and to get back into higher numbers. So don't be surprised you get up here and you fell again, you come back and you consolidate. I keep getting the question, is gold turning? Is this the turn? Well, folks, if they can get on a weekly, if you can actually get back over these swing point highs, it may be the turn. But you got to get over them first, and you haven't yet, because that's where all the distribution is going to take place to get out of this thing. People that are on the wrong side of a trade. So for now, test, failure, consolidate, try again. That's what this thing looks like. If I look at silver, I believe it's telling pretty much the same story. I didn't look at it Friday. Let me find it here and pop it up. There it is, silver. So here's silver. You know, it already got up into the zone. You see how it fell back. It's kind of a leading one, so I would think gold follows it tomorrow, gets a little sell down potentially. But it's going to keep testing. It's going to try to eat up that supply that's there and get higher. It just takes a while when you got a huge supply zone. Let's look at the dollar, because the dollar is what's pushing the gold right now and pushing all the commodities, because the dollar has broken down. Remember last week we broke under these swing point lows on the weeklies. Broke them here, suspect, but you broke. That's a break on multiple time frames. You broke it here. You broke it here as well. That usually leads 1 to 2 bars, 2 to 3 bars down. So you got 2 bars into it. This is the 3rd bar coming up. After that, that's quote unquote the fast move that takes place. After that, you have to expect some sort of a retest regen, which would bring you back up here. But right now, it doesn't show, right? It just doesn't show. What little bit of strength you got was on nothing. If you look at the FXE, which is the euro on the flip side is testing up into the highs, and it actually held it and broke it, right? So the high here, 136.03, you get over it, you close over it. That's a break of the swing point that regenerates that trend, right? The trend, it doesn't transition, it just reinforces it, so to speak, because you'd already transitioned to bullish here. So it reinforces it over the top. If you look at it on a monthly now, the big chore now will be to get this to push. So you're over it on the monthly almost 136.03. Yeah, you are over it. And so the end of this month, if it holds, this will transition as well. So potentially a break on the monthly. And folks, this thing has been in, like most of the currencies, been in 2 zones. Top zone, bottom zone. Right now it's trying to get back into the top. So this is a big move. Now if this really starts to take off, you're going to have to believe gold's going to go, because that's going to push the dollar down into lows it hasn't seen in ages. And it's going to be bullish for commodities and bullish for most of the other currencies. And talking about the currencies, let's take a quick look at a few other ones. So the British pound, up here testing the highs. So again, the same sort of scenario. Just like the euro, it's a little bit weaker, but it's going to try to test the swing point highs. And right now, it doesn't look like it will break them. Let's see, I believe this is the Aussie. Let's see what this one looks like. That one looks like it's failing where all the distribution was. So it has the same sort of thing on the way down. Now this had a nice push up, so I would expect some sort of a failure, come back, find support, go back the other way and test to the top side again. FXE we looked at. FXY, let's see what the yen looks like. Now the Japanese market was down like 2.5%, I think, on Friday or overnight. Friday their time, Thursday night ours. And you can see how the yen has been coming up in price, which hurts their market, but that doesn't look to go anywhere. I would expect you might see a turn on their market as a result of that. Let's quickly look at junk bonds, and then I'll probably shift to a few of your questions. The junk bonds coming up to test, that makes sense. How about the UNG, UNL? This is nat gas. We're getting into that season where nat gas is going to try to make a move if it's going to. The weekly. Well, it looks like it's going to come back up and test resistance one more time. The oil market, we know that this sold off. We were looking for a sell-off, made some money on the SCO. Now you're getting a bounce. You're coming back into the bottom of this bar. I don't know if it's going to get all the way back up here yet. I would expect actually that you come up a little bit and turn and come back down and try to test into this low one more time. So oil market, yeah, it's got a little bounce going, but I certainly wouldn't be buying it. I'd be looking for the place to short it now that you got the break. And I think that was it. So let me flip over to some of your questions. So you like the split screen? I read that. That's great. I appreciate the feedback. Please look at NOV. So this is oil driller, I believe. And as we already said, the oils look to be struggling here. They look like they're going to try to come back when we look at the XLE. So let me throw NOV in and see what its charts look like. So on a daily basis, so what were you looking at? Look at the monthly, doesn't seem to have swing point highs. Oh, okay. Yeah, they don't. We'll get that fixed. So if the question here is why aren't there swing point highs and lows? There should be, and they're not there, so we'll have to get them fixed. Looks like they didn't get pushed to the server. When I get off the air, I'll make sure and get those pushed. And I don't know if you had a question. Oh, okay. So that was just a comment. So I'll take a look at that. So you get a breakout here while we're here. Let's look at it. You get a nice little push-up breakout. This looks like it's got some juice. Going to get up to the top there, about 90, and 90 is just about the all-time high. So that I would think that spike is where it's trying to get to. And I know that they probably had earnings here, or they're about to if they haven't. So that might have been earnings on Friday. Oh, you'd like to know about it long term? Well, I think the test is 90. It gets here to the highs. If it breaks out on the highs on 90, right? If you trade over 90, stay over 90, then you could get a push much higher, probably another 15, 20 bucks. So that actually looks pretty good. This is not a bad place to take a position in it if it's already reported. I don't have that in front of me, but we could probably figure it out here pretty quick. If it has reported, it wouldn't be a bad place to step into it given the way it reacted to the earnings, if that's in fact what it did. And yes, that is what happened. So it reported on 10/25, and as a result of that, got the big spike up, right? So yeah, this doesn't look like a bad place. The only thing is that you're probably going to get some sort of pushback from the sector, which actually is good. It will give you a better entry. So you might be able to get a better entry off of this. Let's see. Could I review what's the better chart, adjust or not? I used to use adjusted charts all the time because that was what I had. And I never paid any attention to non-adjusted data. As a matter of fact, I don't even know that I was that aware of the difference between there being such a difference between adjusted and non-adjusted data. Yeah, I'd heard the terms, but it's like, so much else just goes right over your head. The more I use non-adjusted charts, the more I like them. It just seems to give you a better read. Yeah, there's, like anything else, there's a few exceptions, but for the most part, I like the non-adjusted better. That's what I use here when I'm showing you stuff. I think they're cleaner, and I think they give better reads because they're not, you're not taking the hard part about adjusted is that you're actually taking prior price points and adjusting them based on dividends that were paid, which moves the bars, right? They're not in the same spot anymore. I guess I haven't done this any kind of a study doing back testing, right? Going back and looking at the data, so I can't say with authority, but I can say as I use these, and I've used it about 8 months now, I really like the non-adjusted data better. I can flip between them and look between them, but I do like the non-adjusted better. Almost everybody's adjusted. There was a comment here, funny, because stock charts is adjusted. Almost everybody shows you adjusted data. A lot of times when you see me pull up this, profit charts, right? This is adjusted data. They've adjusted for earnings, and those bars have moved as a result of that. And they look different. Profit charts, bar charts, stock charts, almost all of them are adjusted data. Bar charts does give you the ability on the old charts to flip between the two. But yeah, that's what you see out there. And you know, the more I look at it, the more I like the non-adjusted. You know, it's just my take on it. The Nikkei is rebounding tonight so far. Okay, that doesn't surprise me. I just, you know, it looks like the yen to me is probably going to work back the other way. I can pull up the yen and see what it's doing here. Yen is trading slightly down, not very much. So not a big deal there. Okay, all right, that's it for the questions. Looks like I've run out of time. One other quick question I have to you, though, while those of you that can give me feedback or will give me feedback, is we've adjusted the speed in the terms of the quality of the reception you should be getting. I hope that reception is better tonight. No lags, no hesitations in my voice and so forth, because we'd had that issue since we moved the office about a week and a half ago, and we finally, I believe, cleaned that up. So that's good, because I know we were having some issues. We were working on it. I think we finally ironed those out. I see a comment here saying yes. That's great to hear as well. And I was trying to monitor the transmission quality tonight, and it does look like it was better all night long, so that's good. So I think we're getting some of the kinks worked out and getting things back to normal, so to speak. Now, back to normal on the market means go up. That's exactly what it keeps doing. I would think you're going to see some strength into Apple. I see X Rhodes is on tonight. He's one of the full-time members, proponents of this system. I appreciate your support, X. But X was saying Friday that they're going to run this thing up into the Apple earnings, and maybe that's where we see the turn. Well, it certainly looks that way to me. I can't disagree. Folks, have yourself a great night. I appreciate you being there. You tell a friend, tell two. If you want, you can always come over here and do a referral. If you're not a customer, you can actually become a customer for 3 months for free, just referring somebody that eventually wants to sign up. Of course, if you are a customer, you can get some money back and get more points for yourself. Thanks. Have a great night, folks. I'll see you next time. Good night.